And good morning, everybody, and welcome to the TriggerCharts pre-market rundown for, where are we? June, not the 19th, it's the 20, what do we got? The 26th. Oh, it says the 19th on the top there. But we're going to be talking about some really cool trading setups today and discussing all things related to technical analysis when we're dealing with charting. Please do me a favor. If you have any stocks you want us to look at, put it inside of the chat. There's a little chat box right there. You can put that in there. We'll get to that. We're also going to talk about things that are pretty much moving markets throughout the week, some things to look at for next week, as well as what's happening specifically. One of the things I want you to note is really important. There's a disclaimer, disclosure right there in front of you. This is for educational purposes only. It is not a recommendation to buy or sell any security at all in any way. And make sure that you understand that investing, whether it's in stocks, ETFs, options, futures, all carry substantial amounts of risk. You can lose a lot of money. You can make a lot of money. But understand there is that risk that is associated with it. So, okay, we got a really good group with us once again today. A couple things I'll mention to you. It's really important to get to and to understand that every one of the indicators that we show you and we talk about and we go through are all available on the trading app store over at TradeStation. There's a 10-day free trial. You could use them full. There's no exclusions. Nothing's left out. The full and entire system, the Commander Series, the Aileron, anything you want to look at is for 10 days, 100% unlocked, available. If you decide to, in fact, subscribe, and we have, it's amazing actually, the last few weeks, the number of subscribers is like on a straight line up. So something is going right. People are really enjoying this, making money with this, and doing what they can to keep themselves out of trouble. But as an extra added incentive, anyone that subscribes to the TriggerCharts Commander Series indicators through TradeStation will get a 4-hour free coaching session that is available online. You can do it at your leisure whenever you want. You can just go through it. It is something that we prepared some time ago as an evergreen training session for technical analysis, and I think you're really going to enjoy that. So if you do want to do it, I'd really encourage you to make sure either if you haven't done the trial or you haven't subscribed yet, it's high time to do so. All right. Enough with all that. Let's get on to what's going on with the markets right now. So we got the disclosures done. Futures are down a bit, and that's probably due to some of the things that happened overnight, not to mention the fact that we're seeing a record cases of COVID-19, coronavirus, kicking up all over the place. We're going to talk about that as well. Right now, the futures on the Dow are down about 180. The SPOOs or the S&P 500 futures are down 10. Fair value is going to kick this down a little bit more. The NQs are down modestly. Those have been the strongest for a while until they're not, like we saw this week, where they had some pretty weak exposure overall and some results during the week. Right now, as it stands at this moment, we're going to be going into a down week for all indices this week. Obviously, that really big day down a few days ago really hurt things and caused it to come down. You know, as we talked about, and you can see on the chart to the right here, if you take a look to the right here, I mean, we're seeing some pretty choppy action, some pretty long bars. I mean, these bars that we saw here, these candles that on the uptrend for the S&P on a daily basis were pretty nicely tight, moving along through various holes, some gaps, but we're starting to see that chop happen again, some long tails, meaning that buyers are still out there looking to buy the dips when you see those long tails. And but we're seeing these long bars. These bars get a lot, bigger and wider. And in fact, if we put the radar on here, which is it takes a closer look and drills down into exactly what's happening on a much more granular basis, we would see that there is a lot of holes and pockets in this market right now. It's a very difficult market if you're trying to necessarily, swing it, hold it overnight, because one day to the next, a lot of things can happen. Overnight, we did see that the banks were under pressure, and they're under pressure during the day. Goldman, Morgan Stanley, Bank of America, Wells Fargo. The reason is that the Fed came out with a stress test, and they put some very significant stress related to things like a full lockdown due to a pandemic. And they said that, you know what, at this point, while balance sheets are strong, they are not going to recommend or allow for additional buyback of shares, nor are they going to allow for any additional dividends, and possibly even dividend cuts may be hitting some of these banks moving forward. So banks under pressure. One of the things we do know is that you have to have the participation of banks, generally speaking, technology and banks. But banks, if there's no support in the banks, banks are loved by everybody. They're cash cows. I mean, the fact is, if you go to any analyst out there, any major investor out there, the one thing they always seem to recommend, no matter what the situation is banks, the financials. Reason is they basically print money and they're protected. So not only do they print money and they have the opportunity to make money in almost any circumstance, but if things go bad, we know the Fed is back there backstopping them, and why not? So the fact is that when we have this right now, there is the situation where you see a risk off. Usually the banks are fading and, again, not doing well today. So right now the horses are smelling the barn. We're coming into the end of the quarter, end of the month, and this is a time of rebalancing. And this quarter in particular, there could be a very significant rebalance. Like we saw last quarter into the end of March, where stocks dropped so dramatically, there was a big push into stocks, rotating out of bonds. And right now we saw the big move on stocks throughout this quarter. The potential for a significant rotation out of stocks, at least temporarily, is going to be there into either bonds or other asset classes, particularly moving maybe from growth to value and from large to small. That is the potential rotation that we may see over the next, I would say, week or so. Now, next Friday, quick note, next Friday is a holiday. We will not be here. I'll have to update that and make a note of that. If Kevin, you're listening, you can make a note of that. We need to take that off of the webinar list if it's in there. It is a holiday, so markets are closed in observance of Independence Day, the 4th of July, or July 4th, whatever you want to call it. So where we are right now, we see bullish and bearish patterns in a lot of stocks and in indices. We're pretty much holding above the 200-day moving average. We're seeing a bit of a Pavlovian response, and I got some charts to show you on that. A Pavlovian response with regard to a dinner bell ringing and the dog starts salivating. Well, that bell is the 200 or the 50-day moving average, and once it gets there, investors are starting to salivate and then pushing money into those areas. And I have some really good examples of this. We have an overbought situation we talked about 2 weeks ago, getting back to equilibrium. Right now, starting to already move lower into oversold, but very slightly. It's probably, let's see where it is exactly. We can pull that up, can't we? Yeah. Oh, we're back in equilibrium as of today. So we're right smack in the middle. That overbought situation, that overheating situation that we saw in, going back to the 8th, 9th, and 10th of June, obviously rectified itself very significantly. And if you look at this, it's a very interesting pattern. You'll see that this is right now, we could draw some lines and see a bit of a channel, taking out this big dip right here, but this channel that we're seeing moving lower right now. So what we are seeing is, at the moment, for the SPY and the Dow, we're seeing lower lows. We're starting to see this tick down, right? The lower lows starting to move lower down. Now, there are some moves on the upside, but again, the low of the day is lower than the last pretty much over the time. What else we got? What else we got? States, we talked about this. The quarantining that went on is over. The states are reopening, going through the phased process, which they're supposed to have a 2-week for phase 1. If there's no increase in cases, no increase in hospitalizations, etc., they can go to phase 2. And, well, they're ignoring that primarily due to the fact that they need money. The states are basically saying that, you know what, we're going to go through this and we'll open up for 1, we'll open up for 2, regardless of what the numbers look like. If you haven't noticed, it's pretty disturbing that we are reopening at a level of cases higher than we were when we all panicked back in March and April. So right now what's happening is that we're seeing a further case count increase. We're seeing some states and rumors of other states like Florida thinking about slowing down the phased-in reopenings. We see that Texas did in fact say they are stopping right now. They are not going to move on to the next phase, while places like New York are going into phase 3 next week. So there seems to be about a 3-week delay until such time that all of a sudden we see a spike in new cases. The big issue, though, is not necessarily cases. What we're all looking at is hospitalizations. That's something that's really important. And right now we are seeing that in Houston area, they're pretty much out of ICU beds. That's a big problem, and that's why they were forced to slow down the process. Unfortunately, they did it too late. And you'll see that they're going to be in an emergency situation probably in the next 3 or 4 days. But this has been having a real impact on markets. When Apple said that they weren't going to be, or they're going to be closing down several stores in Florida and in Arizona, and I think in Texas, and then they came out with even more stores being closed down after they reopened recently. And you're seeing that Disney is postponing their Disneyland plans for reopening, and SeaWorld's coming in with this. And a lot of companies are saying, you know what, maybe we shouldn't be opening up so fast. So a lot of headline bombs due to the COVID-19 situation going on. Oftentimes, the good news is we're seeing a resolution pretty quickly. The algos are grabbing their handles around the news item, and then investors saying, well, okay, it dropped. We'll buy that dip, and we're seeing that there's a big turnaround. One of the things I thought was really interesting is there's a lot of discussion that's being put out right now about the potential, and this is not a political statement at all, so just listen, we don't talk politics here, but we talk how politics play a role in the markets, right? It's important. One of the things is that there's a lot of talk swirling around right now about a Democratic sweep. Now, whether or not that's happening, whether or not we believe that's not the point. The point is there's this discussion. And this discussion now is leading into, well, hey, wait a minute. Is some of the weakness in the market right now because of the fact that we're seeing that there is a potential for Joe Biden coming into the White House because he's leading in whatever poll there may be, and the fact that there's going to be an increase in taxes, a rollback on regulations and putting on more regulations, and a clamp down on some of the spending. Well, I've never met a Democrat that didn't like to spend. Let's just get that straight. Republicans are the outsiders right now in the spending camp because they're spending like old Democrats. Let's just, let's be truthful about that. But if that narrative starts to weave its way into the markets, the question is, are we going to see that there is a belief in that narrative? And if, in fact, we get closer to the election and the polls continue to state that there's going to be a Democratic win, whether it's the White House or a sweep in Congress / the Senate, or let's just say Congress in general, is that going to be enough to cause markets to rethink things? Possible. New brokerage account openings. I thought this was really fascinating. So I've been calling on some of the places that we work with, and things like TD Ameritrade and Schwab and Interactive Brokers. We've heard from E-Trade. Their brokerage account new openings, first-time investors, has swelled. TradeStation, they have told us that they're at like 2 times the amount of normal, 200% of the normal amount of openings that they've seen, and is out of control. In fact, we're seeing that a lot of companies are having difficulty on the opens and sometimes on the closes, keeping up with the trading that's going on. Not reflective in volume, by the way. Let me see if I can pull that up if we have that. Is it? Nope. That's not what I want. I don't know if I have that. Yeah, here we go. Look at the volume on the New York Stock Exchange. I mean, the Nasdaq's been holding up, not a big level of volume increase. I mean, we saw that volume increase right there in 227 as things are starting to sell off and start to rise a bit again. So definitely more than we've seen, right? That was a big pickup at that date. But look at the New York Stock Exchange, those stocks. There's just no volume going on right here. So I'm not exactly sure what is going on in terms of maybe the partial shares and fractional shares that are happening, and whether or not there is a lot of retail trading that's going on, very insignificant size, possibly. I don't know. Point is, it's adding a little bit of support and volatility to the markets. This week, economics. New home sales were solid. Initial claims disappointed. Durable goods rebounded plus 15%. We're going to see these records. We're going to see that you see a significant amount of drop, like we saw in GDP coming, and the next quarter may see a bit of a rise, like a 7% rise. One of the best numbers we ever seen. Why? Because when you see basically grinding to a halt, and then all of a sudden a pickup, even a small amount of pickup is very substantial. Next week, into the close of the month, into the close of the quarter, we have the S&P Case-Shiller Housing Index. I'm kind of interested in looking at this to see what the 20 city is doing. There has been a de-urbanization trend that's going on that's very significant, and I want to see how that's really impacting single-family home prices in rural areas of the United States. Auto and truck sales will be coming out. That also may be pretty hot. We'll have to see how that compares to used versus new. ISM manufacturing and non-farm payrolls. Yeah, here we are again, getting the payroll numbers, and whether or not we're going to see an adjustment to the last number that we saw, where we saw plus 2.5 million, and whether that was just a fluke, and this number coming in is going to be much different. We have seen a consistency of about 1.5 million of initial claims on a weekly basis, and you have to wonder what that means for the overall situation otherwise. What else we got? 4-hour coaching, we talked about that. All right, let's get to some of these stocks, then we're going to get to some of yours also on yours. And you know what I put on here, I just added some moving averages, by the way, on here. And I thought it was kind of interesting to look at a few of these, but let's go through some of the names that we've been talking about. I mentioned this last week. Hopefully some of you took advantage of this. This workhorse last week was, let's take a look where it was when we talked about it. If this is Thursday's bar right here. So this would be Wednesday, this would be Tuesday, Monday. Last Friday, talked to you at about $5 a share. And right now it's approaching what? $8.99. So hopefully you looked at that. There was this pattern that played out of this squeeze over time. There was some good news that came out about the company too with their electric vehicles and a big order they got. But I mean, we're talking about a beautiful move from about 5, and this called this long back down about 259. You know, we have the aileron that's doing well. Everything looks really good. We have this basing pattern, and then pretty much over, let's go back a little further, anywhere over about 378.4 was kind of in buy zone. There was nothing here. We always talk about the idea of looking left, right? Always, I talk about this all the time. You know, look left, look left, look left, look left. Looking left is really important because what it does is it gives us the overall view of where there are potentials for fast zones. That's what this whole system is built on, the idea of looking for fast zones that move very quickly vertically through time rather than consolidation, which is a slow move oftentimes horizontally through time. So what I'm saying here is that we want to find these zones where we can see this upward move, not kind of like this move here or just like, you know, a slow move. When we're trading, we want to find those zones that can see a very quick and almost, I would dare say, a parabolic move to the upside. And you could identify those zones with the TriggerCharts Commander series, because what it does is it shows you where those levels are of support and resistance based on volume. What we do is we take every single tick, every single trade, and we compact it, we hold it and move it. So every 30-minute bar has all the trades consistent of where the trade was at any given point with the volume. And what we then see is we draw an area and start to look at this and find where the longer-term volume trend was. Where is that level that major players are really pushing the money in, and where is it that there's not much money coming in? And what we could then do is then express that as a very simple 3 lines to show us where those top levels are for resistance, the bottom levels for support, and the blue line, the cyan, which is the high volume node. That's where the majority is happening. And we see patterns like this one here when we look on the 30-minute, what do you got, 30-minute chart here? So what you can see here, for example, which I think is really interesting, is that we see this is a pretty well distributed, right? It's the same distance from the red line. Let's push this over here. Same distance from these 3 lines, kind of equidistant, all 3 of those. Look at the difference here. Pretty interesting, right? Those are much different. So you have the potential for a very fast zone through here. Now, right now in the 30-minute, we are seeing this opening up at 889. So we're, you know, kind of what price? 889, yeah. So we're kind of moving above this level. Right now, this looks to be cooling off a little bit, and I'd be concerned due to the parabolic move, but there's still opportunity here. But the point is, this is what it gives you, the opportunity to see where those zones are. If you want to play the inside of the range, this is a range from 963 down to about 853. That's a pretty good range for top and bottom, top and bottom. We prefer to play for breakouts and breakdowns. But nonetheless, that was one. We also talked about, let's go back here and get rid of all of our drawings. And let's look at U1. This is one we talked about that was just out of control. This is something that I said was probably a little bit overdone. There's a lot of reasons why. I talked about some of these SPACs, IPOC, Social Capital, Hedosphia, which is an interesting play here. It is a blind trust, a pool, just something that has been kicking up lately. NCL, talked about this also. NCL is interesting in that it just can't get anywhere going. The longer we have this coronavirus with us, the more problematic it's going to be for the cruise lines. They're probably the epicenter of where you just don't want to be. Jets, this is another one that a lot of people have asked me about. Heading down to the 50-day moving average right here. I put these on for a reason. I'm going to show you some of those charts in a second. We don't really look at those as regularly as we do the actual lines right here because we don't think they have a lot of potential. There are some market conditions, though, that you see that institutional advisors will do their best to defend the 200 and the 50-day moving average. For example, let's take a look at what happened yesterday. Look at that. This is the SPY. This is the 50-day moving average right now. So SPY is trading down at what, 306.15 right now, right about here. They defended this twice, actually 3 times, 4 times going back. Where'd this close? Let's see where this closed. Close 307. Yeah, so this is a defense, this is defense, this is defense, here and here. So you have plenty of, going back to, look at all these defenses of the 200-day moving average. Very important levels. Again, not a lot of volume in there, otherwise we would have shown that. But you know what, when we draw a line across here, you can see that when we meet up with one of our levels of resistance where there is a lot of volume, you have to respect that and say, you know what, maybe they're going to hold that until they don't. Right now, it's very clear that the aileron is showing a very significant downtrend that's happening with no real upside. Our daily bars on the SPY says, and I'll tell you what this translates to, do not be long. Do not be long. Now, there's a lot of range here, right? We're talking about from about 300 up to about 313. You could see a lot of stuff going on right now. Bottom line is we've seen more of a shorting pattern, or at least an out pattern, than we have seen a long pattern over the last 8 or 9 days. And then when we see that the trend, the momentum, and the aileron, which is again a separate indicator, I just put this on to show you because I like to look at it at the same time, is negative and not really rolling up. Kind of tried to get above there a little bit, but didn't. This is a sign that there's weakness in the markets overall, and the sell side may be a better place to look at. That was SPY. NKLA, talked about this a little bit, kind of off the charts here. This is a company that is an electric truck company, has no revenues, has nothing on the board right now, has not gotten the truck out. But people look at this like, hey, maybe this is the next Tesla. Went from about 16 to 75 recently. Pretty crazy. Some of the things that we probably would want to stay away from is things like this. You know, stock that goes from right here, about $8 up to about 65 in a matter of 2 days, straight back down, came up, straight back down, came up. I would venture to say that while it's flat on the pre-market, you know, this is just not, look how wide this is. You got from a 58 to a 17. That's how wide our range is right now on the altimeter. That is just not a play that we think is really good. Peloton, can't stop it. Got a nice call to go long at about 49 last time. But this has been, look at this. This aileron has been straight up. Everything is straight up. This is the classic stay-at-home. What do I want to put here? This one's work. Stay-at-home stock. I want to show you, zero in on this too. I want to show you some of these defenses of the 50-day moving average. Well, this one actually comes down to the high volume node and the 50. The red line right here is the 50-day moving average. Seeing a defensive work there pretty well. That was even on a bad news. There was a bad news item out yesterday on this company that Salesforce would no longer be using their product. They're coming up with their own, and stock bounced pretty well. Weight Watchers, look at this one. This one's kind of interesting. One, let's see, going back here, one, let's stamp these right here. Defense, 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 defense. And we got a low side of 23.52. So if you do see a drop of this down to that, it seems like this would be a good bounce candidate to look for. That's Weight Watchers, or what do they call them now? Same thing here. You know, we got, look at this. This is, again, I'm showing all 50-day moving average items here. What we're seeing is institutions are trying desperately to protect. That's what's happening right now. They're no longer in some of these stocks in buy mode to move higher. They're in protection mode not to get killed on the downside because they probably hold a lot of this position in their portfolio right now. So just realize that's kind of the mentality that's going on. What else do we got? CDW, same thing. 1, 2, 3 protections, and our line is right there. So even if you didn't have this on here, even if you don't have this line on, you can see that CDW actually has a really poor aileron, getting worse. It is trying to protect the 50-day moving average. That's institutions coming in. And we do see that our line coincides with that, which is pretty good from a defensive standpoint. BAH bounced a couple of times right here, right here. Still probably has some time to come down, I think, a little bit. Look at this one, classic, right? Look at this classic protection method here. So this is what happens when you see the institutions come in, right? They're protecting the 50-day moving average. They're protecting the slope of the 50. This is the 200 up here. You know, you get the 50 below the 200. That's not a good combination. You don't want to see that. You don't want to see the 50 below the 200. Now here is, I think, a more important issue. You're in a kind of a tight range. And this one really, you saw a defense of the 200, but more so our line right here. Look at that. You saw a really good defense all along of LITE, down slightly in the pre-market right now. It did, in fact, defend its 200-day and bounce. Anytime you see that, you know that investment, the major players are out there, are on their heels. They're protecting as best as possible until they can kind of maybe get some of their shares out over time, reduce their position, but they don't want to see this thing drop significantly. And you, as the investor right now, have the advantage of knowing that. If you put some of this on, you know, where are they in all this? Are we below? Are we above? Are they defending? If they start to defend, you know, put your thinking on. What does that mean? That means they're on their heels. They're concerned about this. ISRG, I thought this was an interesting one. I mean, you got the 200 and the 50 being protected right here, dropping down from about 585 down to about 540. Not a big deal, but again, protected very well and bounced perfectly off of our level right here. We got some stocks that people asked me to look at. Let's take a look at this. I think Ericsson got some nice play due to the T-Mobile stuff and all the things that are going on there. You know, right now you're in a consolidation pattern. You can go either way on this. I would think that, you know, you have, I mean, this is a wide range. When I look to the left, right, look to the left, and let's take a look at this. Let's take off the moving average and let's put it on the radar. I mean, you're at support right here. I mean, I would think you have support down right where it came down to 897. And then you got a drop zone to 876. I mean, it's something you're holding on forever. Okay, I got that. Kind of getting near its all-time high. I'm not plus or minus on this. I really, sorry. Ford's in a drop zone. If we look and we just bring our cursor down to this level, 569, and we kind of take a line here, we just draw it on very easily. I mean, there's your line, 560. Next week's new truck sales, new car sales are going to be important. They came out with a brand new Ford F-150 redesign. I don't know how excited people are with that. Maybe seeing that we have a sloping down overall aileron right here, that's a concern. You know, Ford, you know, do you want to pick up Ford at this level? I mean, I would love to see it back down to about 506, which is about $1 down from where it is right now. Disney. Yeah, Disney is in a short setup. It's also going lower in terms of the momentum. You know, you have a big gap here. I mean, look at this. You could just simply take the tools that you have available over in TradeStation and just draw a box from here right to there. That's your drop zone. There's nothing there. We don't have any of our indicators there. See, there's a blank space. None of our stuff is there. So, I mean, I think you have down to about 105, 104. I don't know if you get down here, but it's all about the reopenings. And now they're not reopening, and who knows what's going on with sports. It could be a big problem for that. SFM, somebody asked about. Wide range up here. I mean, you really got, you got to get above this 25, what is that? 25, I'm going to give you a little room here, 2540, 2550 to see it make another attempt at the top. This wide range of the altimeter right here, this, and then see it contracts here. I like that it's contracting because that could be beneficial. Right now, you're still in a short position though. I think, you know, downside, if we do see a market come down to 2180 is pretty probable, 2175, give or take a little bit. And if markets do cooperate, maybe you can see a break above 2550, but I would not be loading up on this myself if it was that. Somebody's asking, do the calculation of the tool calculate on a server or is the data downloaded to local? Concerned about bandwidth in rural areas of about 1.5 megabits. It is local, but you know, just open up your computer early in the morning and everything should preload and then everything's just coming in. One of the things you want to do is this radar up top here will take a lot of data. Now, I'll just give you an example. Let's put in a stock. Let's see how long it takes. I have high bandwidth. So this is Microsoft. It took, what, 2 seconds, I guess, to load. So, you know, with that, I think that you should just be careful on the amount of symbols you put in the top part here. A chart, though, is quick loading. I don't care what you do. Very quick. So we've programmed it that way. This does take a little bit more data if you're doing all this work up here because we're using 30-minute intervals for all this. All right, the market's about to open. I want to thank you. I want to tell you once again that please do yourselves a favor. that playbook, that trader's playbook, which is a 4-hour, and the markets are open now, a 4-hour coaching session is available to you for anybody that subscribes to the Commander Series. Check out all the other things we have to offer and the 10-day free trials over on the TradeStation trading app platform. Thank you for so much for being here, and I will see you again, not next week, the week after.